Now let's move to the direct labor cost. Right. Direct labor cost. Information number I, salaries and wages. Right. Wages paid to the, okay, 3 factory workers were employed and they are performing a direct labor. They each worked 1,600 hours normal time during the year at 40 rand per hour. They each worked 300 normal time during the year, 300 hours overtime during the year at the rate of 50% more than the normal time. Let me repeat it again. 3 factory workers were employed. They each work 1,600 hours normal time during the year at 40 rand per hour. They each worked 300 hours overtime during the year at a rate of 50% more than the normal time. Right, now let us start with the normal time. Okay. Right, calculate it. How many employees do we have? 3. Each worked 1,600 hours at a rate of 40 rand. So now let's calculate. We say 3 by 1,600 by 40. Now the normal time wage is 192,000. Now we go to the overtime. Overtime, each worked 300 hours overtime at the rate of 50% more than the normal time. Do not forget the normal time is 40. If they work 50% more, it means the overtime will be 60 rand. Right, now we are saying 300 as number of hours worked, multiply by the number of employees, multiply by the rate to get the overtime wage. Multiply by 3, multiply by 60. That was 54,000. So overtime as 54,000. Right. Okay. Now we say 192 plus 54,000 to get 246,000 as a direct labor cost. 246,000. We add this to get the prime cost or the direct cost by saying 246,000 plus 625,300. The total prime cost 871,300. 871,300. Now we move to the factory overhead. Factory overhead cost. We did the notes to the factory overhead. So the total factory overhead was 346,760. 346,760. We add the prime cost and the factory to get the total manufacturing cost. Now let's add 871,300 plus 346,760. As 60, right? 1,218,060. Now we say work in process at the beginning. Work in process beginning. We add the work in process at the beginning. Let's go to the information. We have the work in process at the beginning as 35,000. 35,000. Right, now we say 1,218,060 plus 35,000. Right, now we do have 1,253,060. Then we say less work in process and but if you look in our information, we don't have the work in process at the end of the financial year. Now we must go to the information number J. Information J says the cost of production of chocolate for the year is 1,212,000. Right, now we say the cost of production of finished goods as 1,212,000. So to get this, we have to say this one minus this one. This total minus this total, you'll get the difference of, let's calculate it, 41,060 as our closing stock. So meaning that the closing stock will be 41,060. Right. Now we are done with the production cost statement of Cape Chocolate. So let's move to another questions of Laduma Traders by answering the internal control in this business. Right, let's go back to Laduma. Laduma Soccer Boots. You are the managerial accountant of Laduma Soccer Boots manufacturers. You have compiled the information shown below. For the past 2 years, the business has been experiencing a consistent losses. The owners have requested your assistance in planning for the future to make their firm profitable. Right, now let's go straight to the problem of this business, the internal control, whereby we have to apply the internal control and the audit.